Welcome friends to Markets and Economics. This video is a complete guide on fundamental analysis. If you have ever wondered how long-term investors identify strong companies, predict future performance, and avoid risky stocks, this video will give you every tool you need. Let's begin. What is fundamental analysis? Fundamental analysis is the process of studying the true value of a company. It answers one question: why should I invest in this company? FA looks at the business, its financial strength, its industry, and the economy around it. The goal is to find companies with strong foundations and long-term growth potential. 3 layers of fundamental analysis. 1. The economy, macroeconomic analysis. A company does not exist alone. So we study the broad environment first. We look at GDP growth, inflation levels, interest rate changes, unemployment trends, and consumer confidence. Rising interest rates slow borrowing. High inflation affects costs. Government policies, both fiscal and monetary, also influence business performance. 2. The industry, sector analysis. Next, we study the industry in which the company operates. We check market size, demand trends, competition pressure, barriers to entry, regulations, and where the industry stands in its life cycle. Tools like Porter's 5 forces help us understand how competitive the environment is. 3. The company, business analysis. Finally, we look at the company itself. This includes its business model, leadership quality, competitive advantage, and financial strength. Qualitative factors. Business model. What does the company sell? How does it make money? Is the model scalable and sustainable? Moat or competitive advantage. A moat protects a company from competitors. A moat can be anything that makes the company special. It could be a powerful brand that customers trust, unique technology that only they own, patents that others cannot copy, or even low costs that help them sell products cheaper than anyone else. It may be strong brand value, patents, technology leadership, network effects, or high switching costs. Moat concept popularized by Warren Buffett. Supported and expanded by Charlie Munger. Core idea. Businesses should have a long-lasting competitive advantage that protects profits and market share. Management quality. Good companies fail under poor management. We check leadership vision, financial discipline, transparency, and decision-making. Corporate governance. This includes board quality, auditor credibility, ethical practices, related party transactions, and clarity in communication. Dividend consistency. Stable and predictable dividends show strong cash flow and responsible management. The 3 financial statements. 1. Income statement shows revenue, expenses, and profit. The most important numbers here include revenue growth, net profit, EPS, and all margins. 2. Balance sheet shows what the company owns and owes. Key items include assets, liabilities, debt levels, book value, and working capital. 3. Cash flow statement shows real money flowing in and out. Operating cash flow and free cash flow are crucial to judge financial health. Key metrics every investor must know. Profitability metrics. Revenue growth shows rising demand. Gross margin shows how efficiently a product is produced. Operating margin shows how well the company controls costs. Net profit margin tells you how much real profit remains. Earnings per share, or EPS, shows profit divided by the number of shares. Return ratios, return on equity, or ROE, shows how well the company uses shareholders' money. Return on capital employed, or ROCE, shows how efficiently all capital is being used. Efficiency metric, the asset turnover ratio, shows how efficiently assets generate revenue. Valuation metrics, the price to earnings ratio tells whether the stock is cheap or expensive compared to earnings. The PEG ratio helps you understand if valuation is justified by growth. Price to book value compares price with the underlying book value. Price to sales is useful for companies with lower profits. Dividend yield shows how much return you earn from dividends. Balance sheet strength. Debt to equity ratio shows leverage. Working capital, current ratio, and quick ratio show liquidity. Interest coverage ratio shows if the company can easily repay its interest obligations. Book value represents the value of a company's assets after subtracting its liabilities. Cash flow strength. Free cash flow is the most important predictor of long-term sustainability. Companies may show accounting profits, but only cash keeps a business alive. Shareholding patterns. Higher promoter holding usually signals confidence in the business. Institutional holdings by mutual funds or FII investors indicate credibility. Growth indicators. We review past 5 to 10 year earnings growth, revenue growth, and future growth guidance. This helps predict whether the company can grow consistently. Sector and peer comparison. A company should be compared with others in the same industry. This shows whether it is a leader or a laggard. Intrinsic value and margin of safety. Intrinsic value is the true worth of a company, calculated through methods like discounted cash flow. Investors try to buy a stock only when its market price is below this value. This difference is called the margin of safety. It protects us against errors or unexpected events. Why fundamental analysis matters for long-term investors. Fundamental analysis helps identify strong, stable, future-focused businesses. It reduces emotional decision-making. It avoids overvalued and risky companies. It helps investors build wealth through compounding by holding great companies for many years. It gives clear confidence that you are buying a company, not just a stock price. This was the complete, easy-to-understand guide to fundamental analysis. If you learn and apply these concepts, you can become a confident, skillful, and smart long-term investor. Thank you so much for watching. If this video helped you understand fundamental analysis better, please hit the like button. It really supports the channel. Share this video with anyone who wants to learn smart investing. And make sure to subscribe and turn on the notification bell so you never miss our upcoming videos. I'd love to hear from you. Tell me in the comments what topic you want us to cover next. Whether it's stock market strategies, trading concepts, or personal finance, just comment below and we'll create that video for you. Thanks again for watching, and I'll see you in the next one.